All right, guys, so here's your next video. Your next video, we're going to be going over practice set 3. I'm just going to work through the problems right next to you. I mean, on this Excel sheet right here. I can post this Excel sheet if you want. In fact, I should probably post my lab code also. And I'll post that on Blackboard as well if you guys want it to compare it side by side. So let's start off with number 1. All right, so number 1, very easy question. Again, this is practice set 3. This is table DF right here, and we just want to subset. We want to create a table DF2, which is just the fruit and price column. So basically, we're slicing. I just want all the rows in the fruit and price columns. And that's pretty easy to do. Right, number 1. And that is going to be, 1 second. Second over here, sorry. Find my camera. All right, perfect. There we go. All right, so number 1, here we go. Tables DF. DF2 equals, let me make this a little bit bigger. DF2 equals DF bracket all the rows dot parenthesis just the fruit and price column, close bracket. All right, that's number 1. Number 2, using the table DF, we want to rename the columns from year, fruit, price, QTY to YFP and Q. This is just using the rename function. Don't forget the quotes. Number 3, using the table DF, convert it to a data table DT. That's easy. All right, just simply do DT equals DF, and then do DT done. All right, moving on to number 4. Create a new column O price. Smaller. Create a new column O price. That will be the price 2 rows before, so that DF looks like this. Right, so here's DF. And we want to add a new column called O price. That's the price two rows before. This is just using the shift function. All the rows. Create a new column, colon equals shift. Which column am I taking the previous values from? It's price. And I want to do it by 2 rows. N equals 2, close bracket, done. Number 5. Let me save this. All right. Number 5. create a new column, old price, that will be the previous year's price for each particular fruit given the table below. Okay, so here we have to do a little bit more work. All right, here we want to create another column called old price. That's going to be the previous year's price for each particular fruit given the table below. Now, we can't just simply do this. We can't, this table's name is DFT. We can't simply just do this. DFT, old price equals shift price n equals 1. That would be wrong, okay? The reason that's wrong is because all it's going to do is go here, create a new column old price, and it's going to just shift by 1 wherever the price is. So this would be NA, the second row would have the value 2, the third row would have the value 4. That's not what the question is asking for. It's asking for what will be the previous year's price for each particular fruit. What that means is, for Apple, what was its previous year's price? Well, there's no 2015, so that'll be an A. Right? For all the 2016s, that'll be an A. If we jump to 2017, for Apple right here, what's the previous year's price? Boom. For Apple, why? It was 2. Right? Doesn't make, I mean, it's the same here, but if we look here, 2018, what is the previous year's price? Boom. It's 2. So how do we do that? How do we get the previous year's price? We need to make the fruits broken up into subtables, and then we can take the previous year's price. For example, if I were to visualize for you Apple, all right, let's just create a subtable for Apple, right? It would literally be year, fruit, price, quantity, right? And if we made this subtable, if we made these subtables by each unique fruit, obviously the first unique fruit is Apple. So then this would be 2016, 2017, and 2018. All right. Obviously the fruit would be all Apple, Apple, Apple. The price would be 2, 2, and 6. And the quantity as well would be 10, 20, and 10. All right. So this would be how the Apple subtable would look like. Now, if we had this Apple subtable, and then we said, okay, run the old price shift price n equals 1 command. Okay, well now we're talking. Now this column old price would be created, and over here, this would be an NA because there's nothing before 2016. But for 2017, that would be a 2 because of that. And in the last 2018, this would be a 2 as well because of that, right? And now we have what we want. So what we're supposed to do is add the by keyword and make it by which column? Fruit, because we want each subtable to be by fruit. Now remember, sorry, this is a typo, that's not a dot, this would be a comma. There we go. Oh my God. All right. Oh my. There we go. Nope, that's not it either. Sorry, I think I have like, my screen's going crazy here. Let's do it here. Comma. There you go. This is the answer we're looking for. Shift price n equals 1, comma, by equals fruit, and then we'll get the right answer we want for number 5. Okay? When you're doing this, when you have that by piece, that third piece right here, that third piece, this is always, this third part, even though it's the third section, that third section always happens first. Before any of the other two sections, the row and the column sections happen, that third section must happen first. So by equals fruit, boom. If there's a by there, if there's any kind of grouping by there, boom, the subtables must be created. Once the subtables are created, then you do the other two parts. That's the way it always works. So that's number 5. Number 6. Make this smaller. Create a new column, O price. That will be the previous year's price for each particular fruit. We already did that. And the column O quantity, that will be the quantity from 2 years ago for each particular fruit, given the table below. This is going to be easy. We have the first part of the answer right here, right? And the second part of the answer, we'll just make the changes I need. So instead of O price, it's going to be O quantity. Instead of shifting by price, we are shifting by the quantity table. The only difference is we're doing it by 2 rows, and we're still doing it by fruit. We're still doing it by fruit. If I were to copy and paste this to show you what happens now, right? For each subtable, what happens is it's going to create a new in each subtable. Now this would be NA, NA, and this will be 10, 2 rows before. Okay? Now when these subtables are created and this analysis has happened to these subtables, it's done to these subtables, but then what happens is the subtables at the very end, after all the other 2 parts are applied to the subtables are brought back together. They're brought back together, and that's why over here you would have a O price column with the values. And it's brought back, when they're brought back in the original orders of the rows. So the row orders would be like this again, because that was the original order of the rows, but the new columns would be there with the corresponding values. So for example, 2016 apple would have a price quantity, it would have an O price column with the value NA, and it would have an O quantity value with value NA, right? Same thing for plum, orange, melon, cherry. Down here, when you get to the 6th row, which is apple, you would have the O price column, but this time the O price column for 2017, would be 2. And for O quantity for 2017, line 6 basically over here of the table, would be NA. So that's basically the gist of what's happening here. Down to number 7. All right, using the table from question number 6, create a column total that is just price times quantity. This is easy, guys. We did this math before. DFT, all the rows. The new column name will be total, and it'll just be price times quantity. Right. Number 8, using the table from question number 6, create a table DFS that will be just the years from 2016 and 2017, just for the fruits, apple, plum, and melon. Okay, so here we have 2 filters. We have the filters on the year column. We just want 2016 and 2017. And we have filter on the fruits column. We just want apple, plum, and melon. All right, there's 2 filters. Now, if you remember from before, the filters on the columns go in the first section. There looks like we have no need. We want all the rest of the columns, but we just want to filter on those 2 columns. I'm sorry, we want all the columns. We're going to filter for the values in the fruits and the years column. So let's do my first filter first. Oh. So I will do date, and there's 2 ways to do this. I'll do the long way first and then the easy way. All right, so the long way is I will do parenthesis year equal 2016, or, not and, or, we talked about this before. If you look at the rows, the values can only be 2016 or 2017 or 2018, not both. If you want those 2 years, you have to do wherever the year value is 2016 or the year value is 2017. All right. Now, I will add an additional filter. Again, think about this in terms of Excel. When you have like a table in Excel and you want to filter by more than 1 column, you would just execute the filter command on each column. In R, every filter you have for each column must be separated with the and percent. This is saying, look, both filters are in play. Both filters must be satisfied. So here we have the year filter, and now I'm going to put in the fruits filter. Fruit equals apple, or fruit equals plum, or fruit equals where are you? Melon. All right, close this up. The parenthesis, the bracket, oh, not that bracket, bracket. We're done. We have the solution we want. All right. So that pretty much gives us the, and this we want this, I'm sorry, we want this to equal DFS. This new table is going to be DFS. All right, and that's basically the answer right there. All right, now let's do this in a slightly more civilized way. I'm going to use the in command now to do this, right? I would never write it like this. This is a pain. So I would do something for, let's say, year. I would create a vector for years, 2016, 2017, a vector for fruit, apple, plum, melon, and now I would do the same thing again, DFS equals DFT, year, ampersand in Y, and fruit, F. Look how much easier that is. All right. Same thing that's being written in line 35 is being written in line 39 using the vectors in line 37 and 38. Okay, year. So anywhere we want, and all the rows where year has any of the values that are in Y, 2016 to 2017, and where the fruit column has any of the values in the vector F, apple, plum, melon. All right. And the percent in percent command, I mean, that's what I tend to use more than anything else. And you can see it's evident why, because it's just less wordy, it's less typing. Number 9, using the table from number 6, merge it with the table below using the fruit column. All right, here we go. Merge example. And when I say merge, I want you to use the VLOOKUP command that I basically taught you guys in the lab that we just did in the lab in the video, in the lab 3B video, if you want the lab 3B video. All right, so here, which we'll break it down again. Which table do I want to do the inserting of the data of from the VLOOKUP? That's DFT, that goes first. Which table has the data that I want? That would be table DT, comma. All right, in DFT, what's the new column that I want to create? I don't specify in the question, but because I want the, it looks like because I want the color column, that's the only new column there, color. I'll call it color, colon equals. Now, what's the name of the column in the table that has the data? And that would be table DT. Well, it's color. All right, easy. Now here, all right, here we need the keyword on. On, basically the keyword is basically saying, okay, how do you want to match up the rows? So here, I want to match up the rows by fruit. Basically, that's the only way I want to match it up. So fruit, I have to go first with my fruit, what's the name of my fruit column in DFT? It's fruit. Easy. Equals. Now I have to match up with the fruit column in DT, which is fruit again, but remember, because of the fact that it has quotes, I mean, it's a column from the table that we're doing the VLOOKUP from, we have to put the quotes in. All right. You can wrap this in a C function if you wish. You don't have to because it's just one column, but it's always a good practice too, just so you don't make a mistake when you have more than one columns. But if you don't have one, that's fine. I close it up with the bracket, and I am done. And this will now merge. That'll get the, oh, I'm missing a quote. There we go. All right, and now we'll get all the colors from here and match them up here. Now, very important point. Just like in a VLOOKUP for Excel, we have colors for apple, plum, orange, and cherry. We do not have a color for melon. All right, so what does that mean? That's just going to be NA. There's not going to be an error. It's still going to do the work. It's just going to be NA. That's it. All right, moving on to number 10. All right, using the table from DFT from question number 6, what is the result of the code below? This should be easy. All right, I'm filtering for fruit is orange and quantity is 40. So I come here, where's my fruit orange? Well, that's line 3, that's line 8, and that's line 13. All right, but I have a second filter where quantity is 40. Okay, so where's quantity 40 out of those 3 rows? Nope. Yes. Yes. So 2 rows make the cut. 2 rows make the cut. What is my result set going to be coming back as? This is important. All right, this is important. I filtered the rows, but I did not filter the columns. Therefore, I will be getting back a data table with all the columns. Year, fruit, price, and quantity. The year will be, the oranges that made the cut was from 2017 and 2018. Obviously, the fruit is orange. The price is 8 and quantity is 40, obviously. And for 2018, it's 2 and it's 40. All right, real easy. It just ended up being 2 rows, but all the columns. And again, it's all the columns because we didn't use that second area of the DF table, the data table, to specify which columns we wanted. Number 11, using the table from DFT again. What is the result of the code below? Again, here, again, we're filtering for orange, but now I want all the orange rows, but now look what I'm doing, guys. I have this comma here. I'm now saying, just give me one column, give me the quantity column. Now, just the quantity column. All right, sounds fair enough. Orange, 30, 40, 40, right? My question to you is, I know it's going to be 30, 40, 40. In fact, I'm going to give you the answer. The answer is going to come back as 30, 40, 40. Now, why did I put it in vector form like that? It is because there is no dot parentheses. If there's no dot parentheses, the result will come back as a simple vector. As opposed to the very next question, number 12, it's basically asking the same thing. Look at the difference. It's asking the same thing. The only difference is this has a dot parentheses. Because that has a dot parentheses, right, what this means is my result is coming back as a what? It is coming back as a data table with 3 rows. So this will look like this. The column name with the 3 rows. It comes back as a data table. It comes back as a data table. That is the difference. That is the difference. I might ask you that on the exam, the online exam. All right. 13, using the table from DFT, from question number 6. Well, again, what is the result of this right here? Now here, again, I want orange and price and quantity. This should be easy. Again, I'm filtering for all the oranges. but I want just the price and quantity. So again, because that dot parenthesis is there, I will have just the price and quantity, but I need to add the first row also because there is no filter except for oranges. So I come up here from 2016 oranges, the price and quantity is 6 and 30. Number 14. Using the table DFT from question number 6, what's the result of the code below again? Here we have fruit, orange, sum, price. Well, we know what the filter is if I just select all of oranges and what all the prices will be, then I'll just be 6, 8, and 2. The sum of that is what? It's just going to be 16. Real easy. Number 15, using the table from DFT from question number 6, what is the result of the code below? Again, here I'm filtering just for 2017. Ooh, look what I have here. All right. Now, this is what I'm talking about. When you have that third section there, don't look at this, don't look at this, go straight here first. Buy equals fruit. What's going to happen is you're going to look at it's going to take all the fruit tables and it's going to break them up into subtables. All right. So let's see, 1, 2, 3, 4, 5. Okay, I have space for. It's going to get ugly. Let's do the first one for Apple. All right. Year, fruit, price, quantity. 2016, 2017, 2018. All right, price is 2, 2, 2. Quantity is 10, 20, and 10. All right. All right, so we're on question number 15. For number 15, this is the first subtable. Using the table from DFT from question number 6, what is the code below? So we have created by fruit. We created the subtables by this equals fruit. All right, we just took the first one right for now. Now we're going to do the other two parts. Where year equals 2017. All right, boom. Year equals 2017. We're just looking at this row. The other two rows, they're out. To this row, 2017, take the sum of price. Well, there's just only one value. It's going to be 2. All right? So the answer comes back as 2. Right? The answer comes back at 2. Your results, remember, your results are going to come back as a data table. It's going to come back as a data table because you're doing aggregation on more than one value. My data table will have 2 columns, fruit and V1. Again, because of the aggregation right here. R doesn't know what to call the column. It's going to start knocking off those V's, V1. And the first fruit here is going to be apple, and it's going to have the value 2. All right. Well, let's go ahead and do the same thing for all those fruits now. All right. For the subtables, we know now 2017 is the only one we care about. So if I go down here to plum, 2017 plum, the sum of price is just going to be 8. Sum of orange, again, it's going to be one price, is 8. Melon will be 6. And cherry, will be 8. And this is what we end up with, guys. Obviously, this is the column name right there. And this is what we end up with there. And this is number 15. This is the answer to number 15 right here. All right, go down here. And looks like we're finally done with this part. Oh, did I skip number 14? No, I did number 14. Excellent. All right, so that's number 15. Okay, so number 16 now. We have some math questions. That's fine. I'll set up the equation here. I'll go back and forth to already give you the actual answer. If you guys remember, I don't expect you guys to have a calculator for the exam. Even online, I think it's gonna be more code-based at this point. So I guess I'm gonna test the theory more than anything else, but still, I'll just still give you guys the results of what's going on. All right, number 16, let's go ahead and do this. You invest $100 into an investment that you sell for $80 after 5 years. What is the 5-year return? Here, I'm asking for, okay, so I'm basically asking you what the, even though I say what is the 5-year return, notice I'm not asking you what is the 5-year or the annual compound return. I just want to know what the simple return is over that period of time, right? So what's the formula? You guys remember what the formula is? It's basically your sell price divided by your buy price minus 1, right? So that's that's the equation for a simple return. In this case, I bought an investment, I spent $100 in investment and I sold it for $80 after 5 years. The time doesn't play a factor here. 80 is what I sold it at. I bought it at 100 minus 1, and this will give me an answer of 4 divided by 5. I think about negative 25%, negative 1/5, negative 20%. So this should be about negative 20%. Math right. Yep. This will be negative 20%. All right, very simple. This is the problem with returns when you're looking at returns. I always have investors looking at, or people selling investments or investors looking at different investments, and everyone's talking about returns, returns, returns. And I have to keep reminding both the sellers, obviously the sellers, they're trying to make a buck, but the buyers, right, including the investors, that, hey, returns are great, but what time horizon are we looking at? That's why I always say let's focus on compound return. That's why professional investors focus on compound return. Because over a 5-year period, well, first of all, you lost money here, negative 20%, but it was over a 5-year period, right? So what does that mean on an annual basis? This is why we always tend to focus on compound returns. And the very next question, number 17, it's the same problem again, but this time, what is the annual compound return? Obviously, it's going to be something negative, right? But then again, what's the annual compound return? Remember, again, your formula for compound return is P times 1 plus your compound return to the power of n, which is years, equals whatever your final value is, right? Whatever the final value is, right? In this case, what was my initial money I put in? I initially put in $100, right, for 5 years. We don't know what the compound return is. That's what we have to figure out. It's been 5 years, and the final result of my portfolio was $80. Now, this goes back to the previous question we did before. I think I gave you guys this in the first midterm. You just have to rearrange this to get the right answer, right? Again, move it 100 over, right? So this would basically be, first, let's move the 100 over, equals 80 divided by 100, right? Then I have to get rid of that exponent. How do we get rid of exponents? Some of the math guys, you guys went into some crazy things. Very easy. Just raise it to the inverse of that number. So this becomes 1 plus CR equals 80 divided by 100 to the power of 1 divided by 5. And then I get rid of that 1. And now I have my formula for compound return. Let me just cheat a little bit. Boom. Get rid of that 1 there. And I have my formula for my compound return. I'm going to go ahead and jump on my R just to do it. I believe it's 80 divided by 100. Just give you guys the answer. Boom. And it comes out to negative -4.36% a year. All right? -0.436% a year. Number 18. You invested in an asset for 5 years. The first year return was 5%. The second year was -3%. The third year was 7%. The fourth year was -2%. And the fifth year was 1%. What is the annual compound return for the asset? This is from your previous practice set, also from your previous midterm. Let's just do it to make sure there's no problems. So here again, on the exam, I actually write the code. Basically, you're going to do, actually, just solve this right here. Equals 1. Now, notice here, I said you invest in an asset for 5 years. So here's the question that's slightly different. Before I said $100. Right here I said an asset. I don't tell you how much, and then I give you returns. It doesn't really matter. If you want, an easy way to do this, just make up a simple number. You can make up 100, right? Because again, we just want what the compound return is, which is just a percentage. So it doesn't really matter what we start off with. So here, 100 times 1.05 times 9.97, because that's a negative, times 1.07 times 0.98, that's a negative as well. Oops, typo here. Times 0.98. And finally, the last one, times 1.01. Right. So my final value becomes $107.86 and 8.86 cents or 0.87 cents, right? Whatever. So what's the annual compound return for this asset? So again, this now becomes, because now I have the initial, I set up that my initial investment was 100, and now it became $107. It now becomes number 17. Now it becomes number 17, and I could literally use the equation for number 17. Because this was done 5 years ago, from 5 years, just like number 17, all I literally have to do is do the amount my final value or my cell value, which is this cell right here, divided by 100 to the power of 1 divided by 5 minus 1, right? And so my compound return is what? It's basically going to be about 1.53% annually. 1.53% annually. All right? So that's how we went from number 18, converted into a problem that's like 17, and just use that ratio all over again. All right? Number 19. What is the meaning of the earnings yield ratio? Okay, this goes back to your notes. What is the earnings yield ratio? The earnings yield ratio is basically your theoretical yield. Let's delete that. It's your theoretical yield for, hypothetically, if you bought a whole public company, let's say, for example, Tesla. If you bought out the whole company and you took the operating income as profit in your pocket, right? Because now it's a private company. That is what basically your theoretical yield would be for owning the company. And we use it as a way to simplify what these theoretical yields are compared to other investments that give actual yields, like bonds, like real estate, right? And that's how we gauge whether this is a fair price for a stock or not. In actuality, the bond we tend to use a lot is the risk-free rate, the treasury rates, right? We'll talk about a little bit later. The treasury rates, because usually those treasury rates, again, are considered risk-free, and there's always some sort of a yield or spread that investors want to see between something that's safe versus something that's stock, like risky. Like, for instance, for example, let's say the treasury rates, again, the treasury bonds are from the U.S. government. Let's say it's at 1%, like the 3-month is at 1%. And you're looking at to invest in a stock for 3 months, right? That stock is more risky. Obviously, the stock is more risky, right? So you're looking maybe to say, okay, I want 10 times the yield for that risk. So I'm looking for earnings yield of 10%. Boom. And then you back out what the price would be, right? Like we're going to do a little later in the questions. That's basically how we use earnings yield. It's basically the theoretical yield that allows us to benchmark what is a fair price with versus other investments that have actual yields. All right. And then number 20 is, what does TEV mean? That's total enterprise value. That is a denominator, obviously, of the earnings yield. What is total enterprise value? Total enterprise value is what the actual price of buying a private company and owning it flat out, taking a public company and making it private. That's what total enterprise value is, right? And that's why its components are obviously the market value, your minority interest, your preferred shares, your total debt. You got to pay the debt, and you subtract out the cash, right? So that is how much you would actually have to pay cash-wise for a public company to take it private. All right, jump into number 21. Number 21, given the table below, what is the total enterprise value? Now, okay, I asked for the total enterprise value, but just do it for the last value. Just do it for 2017-12. And so again, what is total enterprise value? It's the market value. What is the market value? That is all your shares outstanding times price. So that's 24 times 30. I'm going to write the equation here and then we'll solve it. 24 times 30. That's my market value. Plus my total debt. What's my total debt? Well, I don't have the total debt. Remember, in our data set, we just don't have it. But total debt is basically total debt per share times shares outstanding. So again, that's going to be 24 times 20. We subtract out cash, which is 4. We add preferred shares and minority interest. Both are 0. Right, and this will be my total enterprise value, and this comes out to basically, if I were to copy this, $1,196. That's my total enterprise value. Now, number 22 is asking, okay, given the table below, same table again, what's my earnings yield ratio? Well, we already have, from 21, we already have our denominator. I just need to get my numerator, which is what? It's going to be the average operating income. These guys right here. And again, you could only do this for the last period because you only have adequate data, the three previous OIs, for this row right here for 2017-12. So what is the average OI? Here it looks like it's 110. Looks like it's 110, right? So this comes out to basically 110, the mean of operating income, divided by 1196, which is going to give me the answer of 9.19%. All right. Come down to number 3, 23, and here, finally, we get to an actual example of earnings yield in action. All right. I have a real estate investment that costs $450,000. All right, let's say you want to buy a house in New Brunswick, $450,000, and that gives you a monthly rent, you rent it out, of $2,500 a month. If this investment has the same risk profile as the asset in question number 22. Now, because I say same risk profile, what I mean by that is it has the same level of uncertainty as the other investment. My cash flow, my risks, everything is the same. I can compare them apples to apples, right? What should be the price of the stock so that the earnings yield of this real estate investment is comparable to my previous stock, the stock in my previous question? All right, here we go, right? What should the price be of the stock? So here now, I have a benchmark. I have the actual yield of a real estate investment. And I'm saying, hey, this real estate investment is the same risk-wise to this stock. Therefore, what is the fair price of that stock? See, now here's the earnings yield in action. Okay, so first things first, we have to understand something. For the sake of simplicity in the question, notice I have notice that the average operating income is quarterly data, guys. Notice that? It's quarterly data, right? 2017-12, 2017-09, 2016-03. And I take the average of the quarterly data, right? So first things first, if you want to compare apples to apples, Let's take just a quarter of my real estate investment. So a quarter will be what? Let's start with calculating what the actual yield is. The real estate actual yield, can't spell yield, right, is going to be what? It's going to be 3 months. Remember, a quarter has 3 months. So 3 times 2,500 divided by 450,000. All right. So that would give me my, I should actually put that in parentheses, just so there's no PEMDAS issues. All right, cool. All right, so let's calculate that. $7,500 divided by 450,000. Right, and we get a real estate actual yield of 1.67%, right? So that's my quarterly yield, all right? Now, for the price, let's go ahead and do the yield for the price, right? Now, how do we do this? I have my yield here, my benchmark yield, but now I need to back out the price. We did this in the slides before. Here's my equation again. All right, let's do my equation again. My equation is basically, this is my denominator, and 110 is my numerator. So let's put the 110 in there. All right. Now, here's the problem. The price is 30. Okay? The price is 30. That is the price. That is what we want to find out. And we need to find out what that price would be so that this equation would equal this. Right there. So we need to work this all out. Now, to just make my math a little bit easier, I'll just put in EYT for earnings yield for, not yet, EYB for earnings yield benchmark, right? It just makes it a little bit easier. All right, and now I can get to work on math. Well, first thing I'm gonna do is I'm gonna take the denominator down here, right? All this, the denominator part, and I'm gonna swing that to the other side of the equation and bring the EYB over. So this becomes now 110 divided by my benchmark earnings yield, which is again is that 1.67%. And now on this side, it'll have this part of the equation again. Right. I'm gonna go get rid of the zeros. I don't need that. And let me stick my price in there for 30 again. That's my variable I'm solving for. All right. Cool. So what's the next step now? Okay, we can do a little bit of math here. Make it a little easy for us. 24 times 20 is 480. 480 minus 4 is 476. All right, so let's go ahead and move that over. So this now becomes 110 divided by EYB minus, again, 480 minus 4 becomes 476. All right, and now we're left with 24 times price. Okay, again, the 476 is basically this part, guys. 24 times 20 minus 4. 480 minus 4, which gives me 476. Move that sucker over, so it becomes minus 476, and this equals 24 times price. Now all I have to do is divide by price. Divide by price. I have to divide by 24. So this now becomes 110 divided by EYB minus 476 divided by 24. And that's going to give me my price. It's going to give me my fair price according to the earnings yield. So what is that? That is going to be equals 110 divided by this number right here minus 476 divided by 24. And so my fair price comes out to be, let me just make sure this part is right. I should probably use better numbers, but it's okay. My fair price comes out to be $255.17. All right. Okay. All right. That is what given my benchmark, what my fair price of that stock should be. Now, what's the price of the stock right now according to our table? It's 30 bucks. Should we buy it? The answer is yes, because we calculated that, hey, you know what? The fair price of the stock, because it has the same risk as this real estate deal, should be $255, right? But it's at $30. It's a steal, all right? So the answer is yes, buy it. Of course, buy it. So this is how earnings yield comes into play. Now, in actuality, what you would do is we would apply some sort of multiple to the earnings yield. So maybe we would say, here we said, in actuality, we said, look, we want it to be the same earnings yield, 1 for 1. In actuality, stocks are much more risky. We would say we want 5 times the earnings yield of the real estate deal or the risk-free bond, or 10 times the earnings yield, right? And in that case, obviously, we would just adjust this number by whatever multiple we wanted, and obviously it would affect the price. But basically, that's the way it works. That's how they use earnings yield to calculate what we call these fair prices. And now, guys, we're finally at our last question, number 24. All right. And here I will just tell you the line that needs to be fixed and so it basically fixed the code, right? So here, line 1 looks good. Line 2 looks good. But ignore the fact that the quotes are backwards. For some reason, when it prints in PDF form, they always switches the quotes. I'm always trying to figure that out, fix that, but whatever. So that's fine. That's fine. Lines 4 is good. Lines 5 is fantastic. Don't get confused by the fact I don't have a price DF there. Just assume it's somewhere there. Number 7. 7 has an error. Where's the error for number 7? It's not that. You can have a dot parenthesis with just one column. It is right there. Line 7, you're missing the colon. Now, obviously, in the exam, I would ask you to write this out. I'm just going to simply just say missing colon with the equals, where there's the equals right there. Right? When you create new columns, guys, in line 7, you always colon equals, never equals. Line 8, same thing. In line 8, again, there's a colon missing there, guys. When you create a new column, you're missing the colon. Make this line 8. Line 9, what are we missing? We're missing the 2 percentage points for in. It should be percent in. Line 10. Line 10 is fine. Line 11. Line 11, you are missing the colon. Notice again in line 11, we're creating a new column. All right. Line 12, again, you are missing the colon. Notice a general theme here, people. Line 14. All right. All right. Missing the colon. Line 14. Missing the colon. Line 16. Missing the colon. Line 17. Missing the colon. Everything else seems to be okay. All right. The reason I stress this point is because in previous exams, people keep forgetting about the colon. Now, you guys will not forget about the colon. Don't miss the colon. All right. So that's number 24. We are done. We're pretty much now done for tomorrow's class. I apologize for the time to load up the videos. It's just, I should have had this done yesterday, but I'm still catching up. But I'll load it up We'll look it over. If you don't have enough time to look it over before the class, you can always ask me the following class anyway. So it's fine. I mean, treat our class times as now recitations with me. So we can go back in previous practice sets. We can go in previous code. So leave it pretty much open. Again, if you understand everything and everything's fine and your code has no errors, then you don't have to log in if you don't want to. For everybody else that has some questions about the problems, about the slides, some sort of errors, I'll see you tomorrow. All right, unless this gets loaded up tomorrow, then I'll see you in a few hours. All right, guys, bye-bye.